It is an exciting day. Let's break down today's action. We have Ron Weiner. He is RDM Financial Group founder and CEO. He's going to tell us why he expects double-digit returns this year. And Larry Shover in the midst of the CME. And Larry was a tough convert to this bullish sentiment. But, Larry, I think you're there. I heard a rumor that you see another 10 to 15% increase in the stock market this year, right?
You're exactly right. Maybe not today or this week, but eventually we will. I mean, let's consider the fact economic momentum is moving in the right direction in the U.S. China has definitely hit some potholes, but they're still moving. Eurozone might be economically or aerodynamically flawed. However, they are healing as well. So all those things combined, I'm seeing a 10 to 15% increase in the S&P 500 by year end.
Larry's the kind of guy who, and we appreciate this, looks tick by tick. He really tells us what the traders are doing. But Ron Weiner, you're in the business of keeping wealthy people wealthy and growing their wealth. What do you see for the markets in the next couple of months? Does this change your opinion from yesterday? You're not that guy who does the tick by tick.
Yeah, well, I'm not the guy that does month by month either. But I'm the guy that looks at the world and says this. And any discussion we have today is going to start with, but the whole world is growing.
Okay.
So we can talk about anything. When we talk about China doing okay, last month they passed the United States for the first time as the greatest import-export dollar-wise in history. They're already the #1 car manufacturer, but they're also buying deodorant. They're buying they're buying cell phones. They're buying all the things that we're buying. The same as in South America, same as all over the world. The world is growing, so what you need to do is just partake in the world's growth.
Well, Larry Shover, we still have problems with unemployment, though. We still have problems with the small and mid-sized businesses. We got some good retail numbers this afternoon, but generally speaking, revenues have not been performing all that well in the earnings. What makes you so bullish despite all that? And, of course, by the way, I didn't mention the pullback by the Fed.
Yeah, well, what makes me bullish is that on aggregate, we're moving in the right direction. Moving back to the BLS report on Friday, it's not the number of 74,000. It's the 3 to 4 month average. It's still above 150,000. We're moving in the right direction. I'm penciling in a 3% GDP, and that's taking into account the drag of higher taxes, etc. We are growing. I mean, it's not horrendously great, but 3% I'm penciling in. That's pretty darn good for us to go in the right direction, for the markets to continue to produce. Yeah.
Ron, are you hovering around 3% too? And if so, then what names would you add to the portfolio that would capitalize most on your view of the GDP numbers?
Well, we think that there's 3 sectors that you got to look at: financials, technology, and industrials. In that area, I picked today GE, Google, and JP I think that all of these are going to participate in the global growth, including JP Morgan, because we think European banks are not going to be as competitive as large U.S. banks. But actually, stay in the S&P a little bit. It's 46% of the sales come from outside the United States. I think the world's going to do really well this year.
Can I just ask you about the banks, though? Why pick a name like JP Morgan? Nothing wrong with them. I think that they're a great bank, certainly. But why not, after such a run-up for most of the names, just go with what Chris Whalen in the last hour suggested, and that's names that provide yield: Bank of America and Citibank?
Well, I think JP Morgan's the cheapest of all. They're trading at about 1.5 times book. I know that's cheap. It's about 15-20% cheaper. But we also own Wells Fargo. We own a few other banks as well.
By the way, JP Morgan is cheap, but they're also paying a lot of legal expenses. Their revenue came down significantly because of all their legal expenses. Their profit was down 7%, as they announced today, and that was primarily because, as they said, legal fees. Are you convinced that the government is through with JP Morgan? Because I think a lot of people question whether that's so.
No, I don't think it's. I think that's going to be some more pain going forward. They set aside $20 billion, but besides which, and I think we talked about this a couple of weeks ago, you're not supposed to buy it when it goes up. You're supposed to buy it when it's cheap. So this is the time you get in, you let that all heal. They got the money for it, and I think that's a smart bet to go with JP Morgan today.
Larry, you've been successful as a trader because you've developed some good habits. I want you to share that in this month of January, the beginning of the year, with our viewers who, if you could guide them, tell them what should they be watching? What are your favorite data points right now, whether it's durable goods or retail sales? Do you look at the price of gold every day? What's the first thing you fire up your computer and look at when you wake up in the morning?
Yeah, well, lately, and I think for a long time, I've been just looking at the manufacturing reports, the ISM, the PMIs, the inventory levels. Those things are the best indicator of how our economy is doing. Beyond that, I don't go after the next best thing. As I've said time and time again, coast is clear investing never works. Preparing for Armageddon never works. We don't want our portfolios be going up in lockstep. We want diversification among all kinds of asset classes. But to answer your question, right now it's got to be the manufacturing indexes. That's the biggest indicator.
All right, well, let's talk about one big indicator today, which was NASDAQ, which was up tremendously. Ron, I want to ask you about the tech sector. We were talking about JP Morgan. They had an interesting call on PCs. They see PCs coming back. They were given out for dead not too long ago, but JP Morgan said they're coming back. As a result, we saw Intel stock go way up today. Of course, that led the whole NASDAQ. What do you think of tech in general right now?
Oh, we like tech a lot. It's cheap. The balance sheets have never been stronger. And again, with the global market, we got people buying all kinds of technology. Companies are benefiting. They don't have to hire people if they can find machines to do what they need to get done.
By the way, is JP Morgan correct? Is the PC going to make a comeback?
You know what? I can't see that. I can't see that happening, but that's what he says. That's what they say. That's fine. We like Google because they're 81% of the smartphone market because we think it's going the other way. So we'll disagree with them right now.
Larry, is there a dark horse sector that you and the traders chat about, whether it's going to surprise to the downside or the upside, that you're really watching closely?
Yeah, we're actually watching materials very closely. I'm deeply convicted that the housing market's going to continue to recover. However, that's hotly debated every single day behind me because a lot of people think the housing market ran up too soon, too fast. It's due for a correction for no other reason that the housing market can't continue to move in the same direction. The other side, people like me, think that there's still room for the periphery to grow. Not all sectors of the real estate market have enjoyed this rally last year. So you can still see stocks like Owens Corning that I recommended back in December with you are going to be good beneficiaries in the year 2014.
Great suggestions. Great picks, guys. Thank you very much. Ron Weiner, Larry Shover. We're going to check back with you in a couple of minutes when the S&P futures close. Thanks a lot, Ron. Appreciate it. Let's head back to Larry Shover, the pits of the CME. Larry, is this rally going to continue into tomorrow?
I think so, but the reason for today's action is about as clear as what happened yesterday. Not really. I think traders behind me are taking a deep breath and realizing we haven't done anything except consolidate and digest since Christmas. This is after having a 4.5% trough to peak rally in December, after rallying 12.5% in the fourth quarter, and obviously up almost 30% in 2013. So traders behind me are thinking we're just consolidating. It is real nerve-wracking to have these knee-jerk reactions that we've had yesterday and today, but until we have that next catalyst, which is going to be the earnings season, expect more of the same.
Larry Shover, good to see you, my friend. Thank you very much.
Thanks, Larry.
You're welcome.
I think we learned a lot from Larry today. When traders share what they look at, he's looking at manufacturing and services.
Plus, he gave us a couple of stock picks as well.
Exactly.